Well, good. Well, those are a lot of great numbers, Chris. And, so we're getting like conflicting inputs, good inputs and bad inputs. We're seeing inflation. We're seeing some crowding out of spending. So eventually that can affect the economy as well. And then we talked about how the bond market, the yield curve is inverted, meaning that you'll get a higher yield for shorter term money than you will for 20 or 30-year money. And so that is highly correlated with the recession. So now, of course, some are insisting there will be a recession, but it's not 100% correlated. So it's only about 80%. So there's still a possibility we don't fall into a recession. So why would this time be different? Well, there are a lot of weird things that have gone on in our economy because of the pandemic and a lot of crazy things that we've never thought we'd seen before or would see ever again, like this big inflation. And then also, while we were having an economic slowdown in January a wee bit, and then inflation was starting to hurt the economy, then this war started with Putin and Russia going off into Ukraine. And of course, they got blamed for the oil price, but that was already up much before the war, and they got blamed for inflation. That went up much before the war as well. So, there's a lot of things that are going on that are confusing to a lot of people. So we just have to keep watching the evidence and see what the markets do. The Fed is going to raise rates again, expected to raise 50 basis points. And the betting is now that at the next opportunity, they're going to do that. They just did 25 basis points last month, and it appears they're going to do more. Jamie Dimon thinks the Fed will go very fast and raise rates pretty sharply. Bill Gross, the bond king, warns that the Fed rate increases will crack the U.S. economy, and maybe that'll lead to that recession that the market's signaling or the bond market is signaling. So it's a really funky time. The sectors that are doing the best are energy, and now once again technology, and then healthcare. Although healthcare on our work is the stocks are still ranked negatively, but energy and technology are very strong. So that's kind of what we see in the economy. Another really interesting thing that has been developing is with inflation kicking in the last couple, maybe 6 months or so, Chris, we've seen the evidence of shrinkflation. We can thank a couple of our good friends for that comment. Shrinkflation is where you still pay the same amount for a certain good, but you get less of it. Or you get a cereal box that is a little smaller for the same price. So they're shrinking the units and charging the same amount. So shrinkflation is happening. It's just another form of inflation, a unit price inflation, essentially. And so that's really been a big issue. So, the jury is still out on this economy. We really don't know where it's going to go. Chris, Bob Barone, the four-star economist, believes that there will be a recession and believes that the Fed is causing most of the problems with their quantitative easing. Now they have quantitative tightening, and now they're going to raise rates right at all the wrong time, according to four-star economist Bob Barone. So we'll see. We're going to have Bob and Josh on with us again in a couple of weeks and see what comments they want to offer. Bob writes in Forbes magazine, so you can see some of his work there, either online or in the magazine itself. But we'll have a personal visit with Bob on the Four-Star podcast. So anyway, that's what we see so far. Chris, the other thing, we talked a little bit about this war. It looks like Russia could be losing the war, or they could be just changing tactics to try and get a little bit of territory and then end the war.
Yeah. I mean, I think Russia's initial advance was, I think in their thoughts, they were going to win the war in their mind in a week. They were not going to be experience the resistance they experienced. They were going to be able to kind of decapitate the government there, install a puppet government, which was, in there before 2014 when they was overthrown. And, I think what people don't realize is to actually hold a country the size of Ukraine, which the landmass of Ukraine is the second largest landmass on the continental Europe, outside of Russia. It's a very, very, very large country. So I think right now we're seeing Russia come to the realization that with the current atmosphere with the current environment there, they're not going to be able to do that. So they're kind of withdrawing, I think, putting a more concerted effort into the east and southeast, and just trying to take where they can take and hold, especially with troops amount, because they don't want to put 500 or 1 million troops into Ukraine to hold the entire country. It's going to cause more issues.
Yes. Well, and recently, the Ukrainians have been winning. Everyone's concerned about what would happen to the economy. And it seems like, a couple of things are happening that will be a legacy of this war. One, for sure, is that 20% of the world's grain markets are in the countries of Russia and Ukraine. Russia is being hampered significantly by all the sanctions, and the sanctions will get worse. Ukraine obviously is not open for business. They're defending a war. So there's not much production going on there. And so that's going to affect grain prices. It's going to affect food prices as well. So that's certainly an issue. But unless something really crazy happens, like nuclear bombs and things like that, the rest of the war's issues probably shouldn't affect the world economy as much. The fear factor is certainly there. And that's what we're concerned about, but it seems to be less and less important. So hopefully that it continues to be the case, and some sort of negotiated settlement ends this conflict, and then we don't have to worry so much about that in the world. Very sad for all the people in Ukraine, all the atrocities and things that we've been hearing about recent days. That's all very, very sad. And from the perspective of the economy, hopefully it isn't going to be as much of an issue. When the war started, the administration started trying to blame the war and Putin on gas prices and inflation. And in fact, the recent speech, the president said, number one was that the gas prices went down as gas consumption totally died. And then, of course, the war started and gas prices went back up, and he blames all of that on Putin. So what do the people think? Well, recent poll, 68% of Americans blame Joe Biden personally for inflation, for his policies. 68% blame Joe Biden for gas prices, and 66% disapprove of his job performance. So, while the administration is blaming Putin and the war, the public doesn't seem to be buying it. Chris, you had looked into changes, though, from this war regarding currency and settling in dollars or in other currencies in oil, right?
Yeah. It was kind of mid to late March that news broke that Saudi Arabia was in talks to trade oil with China utilizing the yuan instead of the dollar, which doesn't seem like a big deal, but it's a very big deal. Since really the 1970s, the oil market's been pretty much completely exchanged in dollars. It's been termed the petrodollar globally. And, it provides a big boon for the dollar, especially as the reserve currency. And, so if Saudi Arabia does go forward with this, which isn't too big of a stretch. In 1970, the United States was the biggest consumer of oil. Now China is the biggest consumer of oil. So I would say it's not out of the realm of possibility if they went forward with exchanging oil or selling oil to them in yuan instead of dollars. It would start to kind of put cracks into the foundation of the current environment we're in. So, we'll see what happens there, but it could set a big precedent, and we'll see if they go forward with it.